Hi everybody, I'm Steve McDonald. I'm one of the editors at Investors Daily Edge. In focus today, Coca-Cola, potash, the market trend, and I told you so on oil and the slap in the face award. Andy Gordon, one of IDE's analysts, is very excited about Coke. He cites a $1 billion investment in the Philippines and how important overseas markets are to Coke. 3/4 of KO's revenues come from overseas, and they are committed to this market, and the Philippine investment will strengthen product distribution, development, and new products. The future of successful investing, as we at IDE have been preaching for a long time, is large companies that have a significant exposure overseas. Stick with it. Potash. The battle continues between potash and BHP Billiton, and now add Sinochem to the mix for ownership of potash. This is taking a very new direction in the history of corporate takeovers, and it leads directly to the worldwide food issues I've been talking about for the past year. Sinochem, a Chinese company, has entered the race not to own potash, but to prevent BHP from buying it. Here's why. China has a lot of mouths to feed, lots, and they are the biggest importer of the fertilizer potash in the world, and that is essential to making enough food to feed their people in the space and the energy they have available. If BHP gets control of potash, the company BHP of Saskatchewan would have BHP Billiton would have a commanding control on the worldwide availability of the fertilizer, and the Chinese are very concerned about what that will mean to the cost of producing food. The bottom line is this: if BHP gets control of potash Saskatchewan, not only will food costs go up, but BHP would have a virtual stranglehold on the Chinese food supply, and the Chinese won't tolerate that. The Chinese, have tried to get Russia involved in the bidding, since the Russians have their own food issues with the huge grain shortage they had this year and will probably have next year. But Russia dropped out, which means Sinochem doesn't have the horsepower now to beat BHP's bid. BHP knows they've got a good deal here. This problem's not going away, and it is just the first of many food-related battles we're going to see. Look at food and fertilizer companies. I think potash is past the point where you can buy, unless there's a surprise bidder on the horizon that I don't know about, but I don't think that's going to happen. Next up, the markets. Most market analysts are finally getting on board my position that stocks will have a solid run between now and the end of the year. The reasons are the same that they have been for some time: ultra-low interest rates, cheap energy, and finally a U.S. government that appears to be forced out of its anti-business stance, whether that stance was intended or otherwise. The prospects of the midterm election adding some balance in D.C. doesn't hurt the possibilities of a run either. This isn't a promise that the markets will run back up to previous highs, but there's going to be some money to be made here if you can keep your expectations under control. I wouldn't be looking for doubles here. Look for the quick pops and take profits just as quickly. Oil demand. There was an article in the Journal this week describing how reserves of oil and other fuels are lower than expected. Boy, am I surprised. I've only been predicting this since last February. Last February, I told this audience that there was an effort then to create the impression of an oil shortage, and it would run up to 85 to 90 by the end of this year. This whole thing is manipulation, but we might as well make some money on it. Are reserves lower than expected? I don't know. Who knows what was really expected and by whom? This is pretty funny that it's coming up now as we enter the last quarter of the year. This is just too coincidental. The lower dollar is also going to help this move. Now, don't get piggish about this one. Let the news unfold. Watch the price run up. It's already up to around 78 from 71 in just a few weeks. And finally, the slap in the face award. Here's a story about a very successful business couple from the West Coast and how not to invest in real estate. Now, this couple bought a house in 2005 for $3.2 million. The house was only, remember this is important, house was only 2 years old. They decided to completely renovate it. A 2-year-old house. They removed and replaced all the floors, because everyone knows the first rule of home buying: never walk on floors someone else has used. They might have some kind of a disease. It's ridiculous. Then they retiled the master bath twice. They didn't like the first job, and it was already tiled. They had a built-in karaoke machine in one of the family rooms. Then they put a heated breakfast bar in the kitchen, which of course is essential for anybody who's in business. One real estate agent said she had to put a napkin under her elbow to sit at the counter. Then they have a separate room just to pack and unpack their suitcases, which we all know you can't live without. And the most essential feature of this incredible waste of money: a view of a lake and a mountain range from the bathtub. How can you wash without a view of a nice mountain range? It's amazing. All these renovations cost the homeowners $1 million. So the house now is $4.2 million, purchase price plus what you put into it. Guess what? It's on sale for $3.1 million. Sales like this, these people are going to be wealthy. What kind of business this couple must have been in, I can't imagine, but I hope it was a monopoly because they show absolutely no understanding of money. Talk about stupid spending. It's no wonder we're in a real estate mess. Spending like this is always doomed. A water and mountain view from the bathtub. Oh well. For everybody here at IDE, I'm Steve McDonald. We'll see you next Wednesday in the Midweek Market Update.